Hi there, welcome to kneppyinvests. Breaking out. It is the most powerful buy signal you can have when you're an investor in the stock market. So I'm always on the lookout for companies whose share price is breaking out or is showing signs of potentially breaking out in the future. So today's video, I'm going to provide 5 companies who are in that stage of breaking out or showing signs of potentially breaking out. Now, to do this, I need to show you some charts. So if you don't like looking at charts, perhaps this is not the video for you, so maybe do something else. The other day, I was actually looking at Facebook and there was a post from someone who equated charts or technical analysis to astrology. And in my opinion, they are completely different things. Astrology is a pseudoscience. There's no science backing that. When you're talking about charts or technical analysis, there is science there because the short-term movements in share price is all based off human psychology, driven by sentiment, positive or negative. That is what drives the share price in the short term. Human psychology, and human psychology is most definitely a science. So the 5 companies I'll be sharing today have a wide range of different market caps, so ranging from about 20 million to over 7 billion, and do a wide range of different things. For example, Jindalee is a lithium exploring company, and Scidev is all about separating liquids and solids, so they're an environmental company. Aurizon is Australia's largest freight company. So let's get into the first company, which is Jindalee. This is a lithium exploring company, IPO'd on the ASX in 2002. And one of the most unusual things about this company was they didn't have to do a capital raising for the first 17 years they were listed, which is unusual for an exploring company. So there must be some reason behind that, but I'm not here to talk about that reason. I'm here to talk about Jindalee's share price breaking out. And the first real signs of their share price breaking out were in regards to Tesla Battery Day, which I think that was on the 22nd of September, which was the 23rd of September our time. And Jindalee's share price did rise 17% on the 23rd of September. And then on the 25th of September, Jindalee released an announcement to the market talking about how Tesla Battery Day highlights the potential of their McDermott lithium project. And the real interesting thing for me was on the same day, Jindalee received a ASX price query questioning why the share price and volume increased on that day. And that must have caused some confusion with Jindalee management because they released a fairly positive announcement to the market. And that was the reason share price and volume increased. So I think ASX, for some reason, were totally out of the loop when it came to Jindalee on this day. And ever since then, the share price has been increasing, a nice uptrend developing since then. Share price has increased from about 50 cents to a high of about $2 in February until we got to April 9 when they released another positive announcement to the market. And the market lapped this announcement up. Share price increased 80% in the day on significant volume. So even though, I'm saying significant, 4 million shares traded, keep in mind that the shares on issue for Jindalee is only something like 40 or 50 million. So that's over 10% on the shares in issue. So the market did like this announcement. The other very bullish thing about this day was the share price closed at the high of the day. And that's another bullish sign. So the main thing I'm going to wait for now is to see what happens in subsequent trading days. So this chart is to the end of trading on the April 9th. So you might be watching this a few days after this. So very important to see how the share price reacts in subsequent days to this. If it consolidates and goes sideways, that would be very bullish and a potential buy-in. The next company I want to talk about is Universal Biosensors. I've mentioned this company in the past as being a healthcare company, but they're not really. They're more diversified than that. They do a lot more. In fact, the main reason I'm interested in this company is in regards to their point of use wine device called Sensia. So that device tests for SO2, fructose and glucose levels in wine. So winemakers would use that, and very much a cost-saving device. I'm also interested in the veterinary diabetes they're into, so testing for diabetes levels in dogs and cats, which is going to become a growing problem in the future because as we become fatter and more obese, our pets do as well. So diabetes will become a bigger and bigger problem for our pets. Onto the charts. So back in July 2020, the share price was around 20 cents or so, and then we saw a well-defined uptrend developing from then. In fact, the share price has gone from 20 cents to a high of just above 80 cents on the 9th of April. And the reason why the share price got to above 80 cents on that day was because the company released two positive announcements to the market. The market liked these announcements and the share price did increase. Now, I wasn't quite as enthused about these announcements, and I think even during the day, the market became less and less enthused by the announcements because we did see the share price fall, so a lot more sellers were coming into the market than there were buyers, and that's why we saw the share price fall during the day. In fact, the share price almost finished at the close of the day, which is a complete opposite to what we saw with Jindalee. And the main reason I wasn't quite as enthused about these announcements were because some of the wordings in regards to the agreement, so non-material upfront payment, non-material maintenance fees, and single-digit royalties. The third company on the list today is Fremont Petoleum Company. This is also the smallest company, market cap of 28 million, share price less than 1 cent. So you can see the highest volume traded on one day was almost 800 million. So they have a lot of shares on issue, and that's a massive negative for me. I don't like to see a company with massive amount of shares on issue, particularly when you see a very low share price, because for the share price to rise, it's going to be quite hard because you get a lot of pip traders in there. So this is an oil and gas company in production and development. So they do actually have revenue coming in the door. Not a lot of revenue, only 600,000 in the trailing 12 months. And the only reason I got interested in this company was because of a massive increase in volume in the last few weeks. And sometimes when you see that massive increase in volume, that shows you the market is getting excited. And the market is getting excited about small cap energy companies right now. So Fremont is in the right space. They've also done an acquisition recently, and I haven't really had a real good look at that acquisition. So maybe that's helped with the driving in the volume and the share price. So I've put this onto my radar just because of the volume, massive increase in volume, and the share price has reacted to that increase in volume. But again, the shares on issue, I think, are quite large for this company, and that's always a negative in my eyes. From the smallest cap company in this video to the largest, and that is Aurizon, market cap of 7.3 billion, revenue of 3 billion, and operating cash flow 1.3 billion. So if you compare the market cap to operating cash flow, actually you would say there might be some good value, but they probably do have a fair bit of debt, so the enterprise value is going to be higher than 7.3 billion. So this is Australia's largest rail freight operator, and they're really heavily into transporting coal. In fact, their coal network is fully owned and it's fairly large, might be the largest in Australia. So the share price, I'm making assumptions here, but I'm assuming Aurizon's share price is correlated to the price of coal simply because of their exposure to transporting coal. Now, this is not really a breakout yet. This is a potential change in sentiment, and this is something I really look for, this change in sentiment. We've got signs there is potential change in that sentiment, and sometimes when you see this change, the share price can go on a medium to long term, a bull run for quite a few months, up to a year or even longer. And in fact, this chart, which is a present day chart, reminds me of something I was looking at back in 2018 with this exact same company. And this is the chart back then, December 2018. The share price looked like it was turning, and I was actually thinking of buying into Aurizon back here because it looked like the sentiment was shifting. Share price then ran from just above $4 all the way to above $6. So there was almost a 50% gain in there over about an 8 or 9 month period. So right now, the chart of Aurizon reminds me of what I was looking back in 2018. So there is a potential 40 to 50% rise in value of Aurizon. But again, just be wary that I do think the price or share price of Aurizon is heavily correlated to the coal prices. So you might have, or not might, you'd need to have some sort of thoughts on the forward movement in coal prices to maybe make a play with Aurizon. And finally, I'm going to end with Scidev. For full disclosure purposes, I am a shareholder of this company. So I'd classify Scidev as an environmental company, and they're all about solids and liquid separation. over the last year or so, they've diversified the areas where they've used their technology. So they made an acquisition in the oil and gas area about a year ago, or maybe over a year ago, and that acquisition has been highly successful. And then just over a week ago, they've moved into the water and wastewater management area, and the market really liked that acquisition. In fact, the share price has increased from 74 cents, well actually it's increased from 70 cents to just above $1. So that's about a 40% rise in share price in a short period of time. The one negative thing I could find about this increase in share price, it hasn't been on massive volume. I probably would have preferred to see larger volume. And the share price has risen quite quickly over a short period of time. And sometimes when you see that rise in share price over that period of time, you want to see some sort of consolidation. So I'm waiting for that consolidation. I wouldn't want to see the share price go below 90 cents again. Well, maybe I would, because then I could make some more purchases in shares in Scidev. But that's just my bias flowing through, because I am excited about the future potential of this company. So that's all I got on this video. 5 more ASX stocks breaking out or potentially breaking out. If you do have any questions about any of these companies, leave it in the comment section and I'll eventually answer those questions or answer any comments you have. Otherwise, I'm not a financial advisor, so if you do need to seek financial advice for your own circumstances, make sure you seek out someone who is qualified and can speak to your own financial needs. That's all for this video. Have a good day. Bye.